Morning, everyone. Thank you very much for joining me. And it's a lovely Wednesday morning here. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. Today is Wednesday, the 23rd of March, 2022. And I'm just going to bring up our high risk investment warning. Again, because it's Wednesday and I want to get this crypto minute up and running and regular. Again, we'll go to the top of the hour, so we've got roughly 15 minutes here, and then we'll switch. We'll go through to the crypto minute, and we'll do that. So just to give you that sort of notice, here's our market commentaries disclaimer, and let's just bring in the references, FXCM Markets Scope 2.0, CNBC.com. I've got tradingview.com just in case. I'm not sure we'll get there, but I will be just going through the morning CNBC note just to start us off. With that all said, let's just bring up the charts. If you don't want to do the Bitcoin chart here, we'll do that in the next webinar. Let's just bring up DAX. Let's just bring up DAX. In fact, DAX is probably will come towards the end. Something I want to show you, which I looked at yesterday, which was very interesting. I'm ahead of myself. Let's just go through the NBC morning note. Good morning, KD, Zanetta. Pleasure to have you guys on the webinar as always. Thank you, everyone, for joining. Just to give everyone the heads up, next week, I believe is the time change, so I don't think it's going to really affect the northern hemisphere, or I beg your pardon, it's not going to affect the EU, because you'll just move along with the time zones. We don't change times here, so any South Africans on the call just know from next week we're actually going to be starting an hour earlier, so just keep that in mind. All right, let's go through the CNBC morning note. The headline reads as European stocks head for positive open as global markets seek to rebound from losses. And you can already see on the DAX we've got a blue candle there. Let's just go through the article. European stocks are expected to open higher on Wednesday as global markets look to rebound from recent losses on the back of inflation concerns and Russia's invasion of Ukraine. Yeah, I mean, UK inflation's out. It's high. I think it was over 6%. So that's just interesting. All right. The positive open expected for Europe comes after gains in major Asia Pacific markets on Wednesday as investors monitor oil prices and continue to access the outlook for US federal monetary policy. So my thought is this is kind of the X factor, oil prices. We'll talk about that in a moment. US Federal Reserve Chairman Jerome Powell said earlier this week that the central bank is set to take tough action on inflation, with traders now betting the Fed will drive up interest rates even faster than expected, given the release last week. So I think that the next meeting is in May. I think it's in May. We're probably looking at 50 basis points there, just to give you a heads up, unless something happens between now and then. European markets continue to monitor events in Ukraine closely. President Joe Biden is heading to Brussels on Wednesday, and on Thursday will attend an emergency NATO summit to meet G7 leaders and address EU leaders at a meeting of the European Council. Biden and his European counterparts will announce new sanctions against Russia. So this is a fifth round, I believe, and new measures to tighten existing sanctions during his trip to Brussels this week. National Security Advisor Jake Sullivan said Tuesday. Just two more paragraphs, and then I'll just say something, just some thoughts of mine there. And of course, I encourage you guys to type in your thoughts, and I'll read them out to everyone. In the UK, Chancellor Rishi Sunak will deliver his spring statement to Parliament on Thursday on the state of the British economy amid a cost of living crisis in the country and concerns over planned tax rises. UK inflation data is due out. It's out. Okay, it's out. It's I don't have the number in front of me, but it was high. I'll just I'll bring it up now. Bring up Forex Factory, and we can take a look at it. It wasn't in my sources, but I think it's worth just taking a look at it. Okay, so here's Forex Factory. You can see that it's over 6%. Okay, it's higher than forecast. This is CPI year on year. Take a look at the core number. It's higher than forecast. Okay, so it's out. It's high. All right. Let's just close this down. So just something that is okay. So just reading. Let me just read something from Joachim. And he writes, how can 3% cause such a price shock? Early investments show disruptions caused since Russia's invasion of Ukraine have taken almost 3% of the world's oil production effectively out of the market, creating one of the largest supply shortfalls since the 1970s. All right, I think that's a good question. I'm going to try and address it to the best of my ability, Joachim. So let me bring up another chapter. Let's go through to the layout. So what I'm busy doing at the moment is I'm getting the next quarterly report ready. It's again, I should be further ahead in that report than I am. Nevertheless, I am working on it. All right, so this is charts I was looking at yesterday. This is the daily chart of US oil, UK oil. Clearly, you can see the huge disruption in the market just because of the volatility. This blue vertical line is the 24th of February. That's when the invasion began. Or the price action to the right, Joachim, you can see there's two, I think, obvious changes. Number one, the length of the candles are much higher. Number two, the swings are much more erratic. So clearly we've got higher volatility. What's also interesting is that we reached sort of a high of around about 130 on WTI and UK, slight differences. And then it swung down viciously, and then it's kind of moving back up. So I think there's another chart I want to show you here, Joachim and everyone on the, I want to change this to the weekly. And this is where it gets very interesting on the weekly chart. In fact, let's just take out the line studies. I'm going to put in a 12-week average true range. Why did I use 12-week? I just used 12-week because that's the quarterly cycle, right? So let's just bring that in. Okay, so here's the, I'm just going to change this to a 12-week. I don't think 14 or 12, I don't think it makes much of a difference, but just to keep sort of in the theme of a quarterly report, I'm going to keep it as 12. I'll put this as 2, a little bit thicker. Okay. Same thing for Brent. Let's do that here. All right. One moment. ATR. Here we go. I'm going to just bring this up as a 12-week. Okay, and 2. Okay, here's another ATR. Now let's just push this up so we get the ATRs nice and sort of large. Now, what I'm going to do is I'm going to change the time frame here. So we're on the weekly. I'm going to go back 2 years. And I'm going to go back 2 years here. And what I want to show you is, let's just move this over slightly, move this one over slightly. All right, so take a look at this area here. Where's my vertical? Here's COVID. So this is a huge shock to the system. I think we can all agree that the lockdown period was a huge shock, specifically, not specifically, but particularly it hit oil exceptionally hard to the point to the point that WTI, so US oil, traded negative on the futures exchange. Not the spot price. Spot can't go below zero, but the futures exchange went to about negative 37, roughly, if I remember correctly. And so there's a huge shock to the system in the COVID pandemic, as the pandemic spreads, as lockdown goes global. You can see that, let's move this over, we get a sort of a peak round about the 9th of, the week of the 9th of May, and then the volatility starts to settle. Take a look where we are now, Joachim. Right, that's that one, and let's just bring up this one. The volatility is higher now than it was at the height of the pandemic, which to me is a remarkable thing to be happening. The fact that there's a bigger disruption to the oil market now in terms of volatility right now because of the war than because of the lockdown. Now, again, just to reiterate, that lockdown was crazy. Who's ever heard of the futures market going negative for it? In other words, the futures, they'll pay you, okay? Cushing, Oklahoma would pay you to keep the oil, right? They had no place to keep the oil. So whilst I certainly acknowledge that there's a 3% shock, I'm not sure, Joachim, we've seen the end of the story. Remember, markets are forward-looking, okay, and that's the key. Markets are forward-looking. This is called the average true range, Alexandria. Nice to have you on the webinar, by the way. Welcome. This is called the average true range. Okay. So so we must understand that 30% of Europe's oil comes from Russia. I believe 40%, possibly 45% of natural gas comes from Russia. Now, whereas the initial thought was that the EU is not going to sanction oil imports, that's no longer necessarily the case. I don't know if it is going to sanction, I don't know if it's not going to sanction, but I know that there are some EU countries that are pushing for another round of sanctions. And now we've got Joe Biden heading to Brussels to speak with NATO, speak with the EU leadership with the intent of further sanctions. In other words, Joachim, I think what you're actually seeing here is the market battling to find some sort of equilibrium. So whilst the disruption might be might only be 3% now, you must also understand that before the war even began, we had an extremely tight energy market with with production very much below pre-COVID levels. Infrastructure for most of the suppliers is aging. The only regions or countries that can potentially pump up oil or pump up production is the Saudis and the UAE, except the Saudis are dealing with a tax on their refinery by the Houthis out of Yemen. Over the weekend, we had about 6 different sites that were attacked. So the market, I believe, is trying to settle on that equilibrium point. Now, the point is this over here, to me is a big surprise. This is a big shock. In other words, I don't think, Joachim, we've hit our equilibrium level, and I think there is a distinct worry that we're going to see higher prices ahead. And that's certainly a possibility. It looks to me as if this is a higher trough in the making. Okay, so I hope that answers your question to some extent. I think that there is a real concern. Now, if you go on to Bloomberg Surveillance, just go to their podcasts, download yesterday's. There is a really good interview with a energy analyst who has a price of $150 by June. Okay, so I think that the disruptions are still in flux, still ongoing, and because of that, we're seeing this disruption. So I don't know if oil is going to be at $150 per barrel, but it was a very, very interesting interview indeed. Just before we cross over to the to cryptos, or just bring up DAX, just let me know if that helps, Joachim, at all. I sincerely hope that answers some of the question. All right, what have we got here? Well, we've got DAX on both of these. Guys, clearly, okay, we're having a rally. I am very much of the opinion we're still going to be cautious. I don't know if this is a bear market rally or not. I do know that we've still got a series of lower peaks followed by lower troughs. So this could certainly be that dead cat bounce. Just be cognizant of that. I'm going to have to cut short here. I duly apologize. Tomorrow we're going to have a much longer DAX, a much longer morning market review, I beg your pardon. But I'm going to end over here. I'm going to go across to our Bitcoin crypto minute, and of course you guys most welcome to join me there. Thank you very much.